Let's go to Caroline in New York. What's up, guys? Good to see you both. Caroline, we started this morning talking with that commentary, the latest bull, but I mean, like, I'm losing track because we've got a bunch of them over the past week. It seems like any doubter of Tesla is being forced to cave right now.
Yeah, and having to play a bit of catch-up, and this time it was Mizuho who upgraded Tesla from neutral to outperform with a price target of $515, so now tied with Dan Ives over at Wedbush for the street high price target for Tesla, but the previous price target that Mizuho had was $230, so missed a huge portion of Tesla's rally, but that still implies about 7% upside from where Tesla closed today, just below $480 a share, up about 3.6% today. And Mizuho is turning bullish thanks in large part to Tesla being a beneficiary of a Trump presidency and anticipated regulatory changes, such as those pertaining to autonomous driving. So Mizuho sees idiosyncratic tailwinds over the next 4 years, positioning it favorably, saying, "We expect Tesla's leadership across EVs, solar battery storage, and charging infrastructure should allow the company to better weather the storm than less established peers as the Trump administration removes subsidies for key end markets. We also see less stringent regulation on autonomous vehicles as a key tailwind to Tesla's ability to scale FSD robotaxi deployments, with our base case scenario implying significant long-term revenue from AV autonomous vehicles operations." So the $515 price target was the base case. The bull case is actually $681 a share, which is even higher than Dan Ives' $650.
Everybody's doing that
if
now.
Tesla can accelerate.
I like the way they're like,
if they can
the bull case or the base case. The base case is the bull case, and then there's like a double bull case.
No, you know who started that years ago, even before COVID, or well, maybe. If anecdotally, I feel like Kathy Wood started that years ago because I remember her bull case for Tesla years and years ago.
Thousands.
Super high, and obviously she was right about that. But
well, I don't know if she has been yet, because this is also stock adjusted. Her, like, you know.
No, about Tesla. Sorry, about Tesla.
Yeah. No, totally.
I'll leave that there.
100%.
But Mizuho's bull case is based on if Tesla can accelerate FSD and robotaxi deployments and hit breakthroughs with the Optimus robot and AI development. So just to put that there, I do want to note in terms of the analyst breakdown for Tesla, we know that there's never really been consensus like there has been for other high flyers like Nvidia, for example. The analysts have always been pretty split. 47% still have a buy rating on Tesla shares, but those 515 price targets are the only two price targets on the street higher than where it closed today.
Wow. That is, to me, a big story, frankly, that so many people are still on the wrong side of this. Got to say, I'm given a little bit of grief because obviously, like, the ARC target is, still in a different realm. But of all, like, the traditional Wall Street analysts, it does seem quite backwards that there are still so many doubters, so many bears. A price target 280 that's like way behind. Like, I get that this is basically all valuation expansion, speculation on what's going to happen. Tesla PE screams loud and clear that's what is happening. But there's real premium in value to, like, shadow running the U.S. government, which is what the CEO is kind of doing right now. But how do we even quantify those things, KG? I mean, like, part of me looks at these analysts with price targets of 280 in Tesla. I'm like, wake up. You guys aren't paying attention. But then I also hear some of the other ones, and I'm like, this is out of control.
Yeah, I think for an analyst, they have to be able to come up with some form of a multiple in order to create their price target, right? And so sometimes you do see prices getting a little bit outside of those multiple bands, and it's hard for them to actually kind of chase price. And that's what they're all doing right now. And it's really hard to quantify a position and a role that Elon has right now. So you kind of have to just roll with it until either the price breaks or you kind of give up, throw in the towel, and you start to raise up your price targets here. And once again, it depends on the shop. Each shop is going to be a little bit different. Like Dan Ives, he has definitely some fundamentals, but he also kind of has some
narrative
intangibles.
Story.
Yeah, he has them exactly, and he's allowed to get away with that. Some analysts are not able to do that, and so
right.
I understand the cautious tone when it comes to the price target adjustments to the upside, and sometimes when you do chase them too aggressively, and it does reverse aggressively. I'm not saying Tesla's going to do that. Analysts also then look ridiculous as well, right? So it's better to be cautious if you're an analyst rather than trying to just chase price the whole time. That's not maybe justified from the from the fundamentals. And you can actually make that case, right? The China data that we had that came out earlier this morning, their China sales, when you're looking at cars that have been registered, they dropped like 15% on like a month-over-month basis. So the sales for Tesla vehicles are not screaming, $400 valuations of stock, from China at least.
Yeah. We're at 200 times forward in Tesla. I don't think people really realize that, like, because people, to the point of the story, I get the story. Like, I'm arguing that you have to adjust, you have to apply a premium when somebody is the right-hand man of the most powerful person in the world, okay? Like, and that's what he is right now. That's worth value, absolutely, in my mind.
Yeah, how much though, Ali?
For sure, impossible to quantify. So that's my next point, which is that when you actually try to quantify it, if you pull up the chart, I'm looking at it right now, of Tesla's forward PE at 200. Think about the way people were doubting the stock when its forward PE was 100. Okay, that's incredible that we've doubled, and that was a speculative trade then because Tesla's supply chain, its build out, its process hadn't been proven yet. Now, obviously, those who believed in Musk paid out and they won, but still, the idea that the market now is pricing double the disruptive value in this company versus before it was even in the S&P 500, before it even was making cars at a mass scale is pretty incredible to me, Caroline. It means like a lot has got to fall into place fast for this company for it to not crash again.
Especially given the fact that on the third quarter earnings call, Tesla said, despite ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024.
Slight.
And the stock is up, 93%. So yeah, this isn't. The bulls have never been bullish on Tesla, though, because of it being a car company. It's been all about, robotaxi, FSD, the robotics, engine of it. That being said, I mean, think about the disappointment after the October event when Elon Musk did finally unveil different things in the Cybercab and that such. We saw the stock significantly sell off. So, this premium really has seemingly all been about, Trump and Elon Musk being BFFs, and I don't know. I think that it's not based on the numbers. So
it's definitely not based on the numbers.
To know how much more this stock can run, because look at the analysts are having to play catch up because at least until now they've been wrong.
I know, and that's very well said. Because I'm kind of talking out both sides of my mouth, but because I can see it both ways, where I get the narrative. I also, by the way, I was blown away when I took the Waymo self-driving in San Francisco, and I've always thought that self-driving is a huge potential disruptive technology. I mean, how many people lose their lives on the road? It's terrifying.
Tesla doesn't necessarily have the
exactly.
lead in that either,
I know, that's my point. Is that Waymo's getting locked in. So it's like each side you could, I keep finding these, as we're pointing out, there are some massive logical gaps in the market's logic here, which is that all right, fine, price that big self-driving market, but they're in third place right now, KG.
Okay, I'll go with the bull case here, and I'm rarely a uber bull when it comes to Tesla. So there's a couple of things that you can attribute this to. One, it's the Elon Musk factor in itself. It's the only way that the normal Joe and gal can actually get exposure to Elon and maybe some ancillary sides of his businesses, right? SpaceX or what have you. And there might be a proxy there where people are actually getting into this company for that. You also look at it and say all they need to do is really continue to have really good free cash flow to get them to the next level of robotaxi and even humanoid robots, which I think of. You brought up ARK earlier. The tangible market that Elon's saying and that ARK is saying when it comes to humanoid robots, I feel is completely, utterly ridiculous. Two robots per every person on the planet. Not every person even has a cell phone, so that's not going to work.
I know,
but even if you kind of have that, you have kind of that means to the end, and I think that's really what people are kind of pricing in for until until he gets out of that orbit. Because it's not a given that he's going to stay in that orbit when it comes to Trump. Trump he's known for fading people too.
100%.
So for now, the party rides. Yeah, for now the party rides. They got to get free cash flow. They got to be able to put that free cash flow into robotaxi, self-driving. But here's the thing: you could talk about it being third on the on the list here. their manufacturing processes are better than any other car manufacturer out there. So they're going to be able to scale faster than Waymo will ever be able to do.
Agree.
And they're already behind the 8 ball there. And I think the market's also understanding that fact.
No, that's a big point, too. The other one, though, really important is that they're friends right now. Who knows? In fact, I picked up a little body language when Cramer asked him at the exchange last week. We mentioned Elon. Go back and watch the tape. Trump was very relaxed throughout their whole conversation, excited. And then when he mentioned it, he goes, he did a big breath and a pullback there. Caroline, I'll give you the last word.
I think the other thing that we haven't mentioned, obviously, Kevin did talk about the China numbers, but is just what could happen with the U.S. relationship with China, given the fact that the rhetoric, at least up until now, has been very much trade war on when Trump gets into the presidency. Now, Dan Ives says that he thinks that there'll be specific carve-outs for companies like Tesla and Apple in China when it comes to tariffs. But, I think that's another uncertainty that I wouldn't guess is priced in with the stock as high as it is. Not trying to take the bearish side. I just think that that's the uncertainty that's looming that I think we'll probably be talking quite a bit about in 2025.
Yeah, very well said. And I think really push comes to shove, even though I believe in a lot of these narratives, and I think they will eventually come true, I think the odds of kind of being a little bit more cynical at this point, we're at 204 PE, is probably favor being a little bit cynical. Great conversation, very fun stuff. Thanks, guys.